I think your viewers and listeners should pay attention to what I'm about to say. He just wants you talking about him. He's absolutely thrilled that he has Wall Street upset, and he's got the banking community upset, and you and I are sitting here on this radio show talking about him, because that's like the number one thing he wants. If he wanted to solve a problem, you certainly would not handle it this way, with this level of hostility, the bellicosity of rhetoric,
so
the lack of diplomacy.
The bigger problems exist. The debt exists. You can't get around the debt. The overspending exists. You still have that. You still have that competitiveness issue. These have repeated throughout history. We're in a period that's very much like the 1930s.
Bear markets, of course, Wall Street says it's always the 1,000-year flood, except it happens every 4 or 5 years. But the problem with this one is it's completely self-inflicted. There is no reason for this. I mean, the last similar market reaction would have been the COVID-19 story back in March of 2020. So it's almost like Donald Trump has now become the COVID virus. And unfortunately, unlike COVID, there's no cure. The first term, it was a lot of people that were former Republicans and they were trying to guide him. He would have done all of the stuff that he's doing right now in 2018, but he just didn't have the staff in place to implement it. So we're here now, but it's not unfortunately not going to end well. It's going to be very ugly.
Anthony Scaramucci knows market chaos. After 36 years in finance and 9 bear markets, he's seen it all. Wall Street loves to call each one a once-in-a-century event, yet somehow they show up every 4 to 5 years. This time, though, there's no external shock like COVID-19 to blame. It's pure political dysfunction. And Scaramucci doesn't hold back. Trump is now a major market risk. Back in his first term, traditional Republicans barely kept Trump in check. Now, surrounded by loyalists, policies that unsettle investors are rolling out with no restraint. Ironically, Scaramucci notes, Trump could have done this back in 2018, but the guardrails were still on. Not anymore. Markets hate uncertainty, and this political drama isn't going away. The impact goes far beyond stocks. Rising borrowing costs, shaken consumer confidence, and global doubts about the U.S. economy are all on the table. Scaramucci's message is clear. Buckle up. Self-inflicted damage takes longer to fix, and the consequences could be serious. It's not about buying the dip. It's about waiting for clarity. The core issue isn't just in the markets. It's in the White House. Watch clips from Scaramucci's explosive interview for more. Like, subscribe, and turn on notifications for more deep dive content. Thanks for watching. Enjoy the video.
I don't think anybody should be surprised. I mean, this is the reason why I was offering out warnings prior to November the 5th. I said that he would do exactly this, and this would have catastrophic consequences for the markets. It would have catastrophic consequences for the global economy. I mean, if you and I got in a room and said, okay, here's what we need to do. Let's see if we can dismantle the world's trading system, weaken the United States, and let's see if we can disenfranchise ourselves from our European allies and other nations where we had strong, reliant partnerships in. And let's see if we can help the Chinese and the Russians. I don't think you and I could have come up with a better plan. I mean, this took 7 Scaramuccis or 77 days, and this guy is, really hurt the country. And so, and what's astonishing to me is he has very smart people around him that know better. But this is an American Brexit. And just stay with me for 1 second. When you guys made the decision to Brexit in the United Kingdom, the economic data was against you. People said, please don't Brexit. You're going to hurt yourselves and you're going to lower your living standards. You guys Brexit. Eight years later, you hurt yourselves and lowered your living standards. And so this is exactly what the United States is doing right now. This is an American Brexit from the global trading community. And remember, he's hurting American workers. He's trying to say, well, the 1% owns the stock market, but that's categorically not true, because firemen, police officers, other service providers have their retirement money locked in these large-scale institutional pension funds. And so, he's hurting those people. He's annihilating them. You've taken $8 trillion out of the U.S. market, $13 trillion out of the global market. So at some point, those people will say, okay, enough is enough. And so if he stays on this course trajectory and we're likely now to see a recession, 70% chance to get a recession, even if the Fed starts cutting rates, he'll lose his poll standings. Remember, he's only at 36% approval as it relates to trade. I think the narrative, this is the interesting point about it, the narrative that's being chanted on your sister network, Fox News, et cetera, is actually a false narrative. No, they're not allowing people like myself to come on and provide the counter narrative. So this notion that the tariffs are going to reset the trade system and it's going to reshore manufacturing in the United States, it just doesn't understand the current system in the world. As an example, if you want to purchase a Boeing aircraft, which is an American-made aircraft, 45% of the components are from outside the United States. If you want to add the electronic components, like the flat screens that go in the back of the plane or the flat screens that go in the pilot's cockpit, you've got 60+% of the aircraft is actually manufactured outside of the United States and installed here in the U.S. So you're going to knock the price of that airplane up 50 to 60%. He's calling for an additional 50% tariff on April 9th on the Chinese. So that's an 84% tariff. China's the Saudi Arabia of manufacturing. So whether you like that or not, that's where we are. He could have achieved his goals doing something more moderate. And he probably could have touched off an economic boom, but now he's going to cause a global recession. Let me posit it this way, and I'll ask you to consider it this way. The United States, in the 50-year period of time, alongside of the EU, Asian nations, let's call it the free world, set up a trading system. It's a system that has been tinkered with over the 80-year period of time. Yeah. Some adjustments would need to be made. If you want to make the system fairer to the Americans, we originally set it up so that it would be uneven for the Americans. We wanted rising living standards around the world, and so we allowed goods and services to flow into the U.S. relatively unfettered. We accepted tariffs from other countries. If you're now saying, well, we want reciprocal tariffs and it needs to be fair trade as opposed to the trading system that we set up, okay, but let's do that surgically, and let's do that with moderation, and let's do that with appropriate guidance so you don't shake $8 trillion out of the stock market. So again, but look, he's about attention. And so I think your viewers and listeners should pay attention to what I'm about to say. He just wants you talking about him. He's absolutely thrilled that he has Wall Street upset and he's got the banking community upset. And you and I are sitting here on this radio show talking about him because that's like the number one thing he wants. If he wanted to solve a problem, he certainly would not handle it this way with this level of hostility, the bellicosity of rhetoric,
so
the lack of diplomacy.
Wall Street veterans are sounding the alarm as political decisions increasingly disrupt global markets. What many once brushed off as campaign talk is now triggering real-world consequences. The numbers tell the story. Trillions in market value wiped out, retirement accounts shrinking, and key economic indicators flashing red. Unlike past crises sparked by pandemics or global shocks, this current volatility is largely self-inflicted, fueled by short-sighted policy choices. Much like Brexit, political ideology is now colliding with the economic reality, dragging down growth and living standards in the process. And the impact isn't limited to stock charts. It's hitting small businesses, retirement plans, and workers in these export-driven sectors. While Anthony Scaramucci highlights the immediate political risks roiling markets, legendary investor Ray Dalio sees something even more profound. The Bridgewater Associates founder, renowned for predicting every major financial crisis since 1971, believes we're approaching a pivotal moment. According to Dalio, this isn't just turbulence. It's a structural shift that could reshape the very foundation of global capitalism. Let's dive into why Dalio thinks we're at a critical inflection point. Here are clips from his thought-provoking video.
I think that we don't understand how the cycle goes because it comes along about once a lifetime. But there are orders, there are systems, and the systems break down for certain reasons, and it creates cycles. For example, there's a monetary system, and then there's a debt cycle. And so as a result, we now have, one man's debts, another man's assets. And when you build these up, and you get to a point where you can't sustain that, you have a debt issue. We have a debt issue. We can get into that, but there's a monetary cycle. There's a internal political order cycle that takes us from one political order to another political order, in which there's then classically great turbulence between the left and the right. And because of disorder, particularly in democracies, there's a lot of fighting because there needs to be cooperation, compromise, and so on. And we're in the process of changing that order. In addition, we have the international world order. International world order began in 1945. There's a war. You win a war. The dominant powers get to set the rules. That was a series of multilateralism, things like the United Nations World Trade Organization, world this and world that. And that multilateralism is then breaking down for unilateralism for the same reasons. So there are these three orders related to too much debt. Debt is money. Second, internal order. How does our system work? Who's going to get control of this problem? And then number three, in addition of the five main forces, there's also throughout history, climate, acts of nature. Droughts, floods, and pandemics have killed more people and toppled more orders. And then there's also throughout history, man's inventiveness and new technologies, which is creating this transformative result.
Right.
The interactions of these is what's going on. So if we look at tariffs represent a dealing with the imbalances. The imbalance means we have a tremendous capital imbalance and a tremendous trade imbalance, which is unsustainable. And so that's the backdrop of this. So, I mean, what does it mean for a company? It means costs are going to go up, revenue is going to go down, and capital is going to be harder to come by. And so, and then we're trying to replace manufacturing. I mean, I agree with the problems, okay, about the fact that we don't manufacture and that there is a problem with that. But there's a structural problem of whether we can manufacture. We have a population that basically 3 million people, 1% of the population, is incredibly brilliant. I mean, they go to the best schools, they come out, they make the unicorns, inventiveness, half of which, by the way, are foreigners. And at the same time, they are making the unicorns. At the same time, what we have is 10% of the population around them that's doing very well. The 60% of the population has below a 6th grade reading level. And it's tough to be productive. So when we agree with the problem, too much debt, Secretary Bennet and others agree we should get it down to 3%. We have to get the budget deficits down to 3% of GDP. This is not, we all agree on the problem. The question is, what do we do about it? How do you create that self-sufficiency? And so from a practical point of view, that manufacturing is very difficult under this set of circumstances to create within the United States, yet it's needed. I agree with the problem, okay? I am very concerned about the solution, okay? The practicality of the solution. In other words, I think that this is going to create not only the problem, the capital markets problem that I'm talking about related to prices going up, costs going up, prices, revenue going down, and capital problem. But I also think that this is going to create great sand in the gears of production worldwide. At the same time, I do agree that this interdependency, this issue of productivity in the world in which we have to be competitive and productive, and we're not competitive in producing things, is a longer-term problem, not an easy one. And I do expect that it is going to have political consequences. This is the nature of the cycle. It is coming also at the same time as we have a budget issue. Now, the budget issue is a comparably important issue So as we look ahead in the months ahead, we have to get the budget deficit down to 3% of GDP. I worry about that at the same time as this is happening. These are not easy problems to solve, I'm concerned, because the bigger problems exist. The debt exists. You can't get around the debt. The overspending exists. You still have that. You still have that competitiveness issue. These have repeated throughout history. We're in a period that's very much like the 1930s.
Something deeper and more unsettling is unfolding beneath today's market and political turmoil. Veteran economists aren't just worried about another cyclical downturn. They see signs of a fundamental shift in how the global economy functions. The data is stark. Global debt levels have soared to historic highs, creating a fragile system where one misstep could trigger a domino effect. At the same time, political divisions in major economies are no longer just partisan squabbles. They're signs of a governance breakdown, making real economic problem-solving increasingly difficult. Internationally, the post-WWII economic order is under immense strain. Institutions and agreements that sustained decades of global trade and relative stability are being tested. The rise in tariffs and trade restrictions isn't just protectionism. It signals a major rethink of globalization itself. What makes this moment especially dangerous is how all these issues overlap. Political gridlock blocks meaningful debt solutions. That weakens economic standing globally, fueling more domestic unrest, a vicious cycle with no simple off-ramp. Adding to the complexity is a growing workforce mismatch. As industries evolve, the skills required are shifting, but many workers are being left behind, creating long-term structural challenges to economic renewal. Historically, when debt crises, political upheaval, and shifts in global power converge, the result is rarely smooth. And while we can't predict exactly how this plays out, one thing is clear: the old economic playbook isn't going to cut it anymore. This isn't about fear-mongering, it's about recognizing the depth of the change underway. Decisions made in the near future could shape the economy for an entire generation. When even billionaire investors are raising red flags, it might be time to listen. As we close, we want to hear from you. What scenario do you think is unfolding? And if you could urge policymakers to take one step toward stabilizing the economy, what would it be? Drop your thoughts in the comments, share this video, and don't forget to like and subscribe for more insights. Thanks for watching.